people be investing in property post-COVID crisis?
Well, it will certainly get more attractive. Interest rates are lower and prices are certain to fall, but property vendors are notoriously reluctant to cut asking prices, and also the mortgage market hasn't kind of developed in the way that you might imagine with rates so much lower. For example, a third of mortgage products were withdrawn almost immediately the crisis broke. Of the fixed rate deals that are available, they are tending to be at higher rates than were prevalent before the crisis. And in terms of deposits, lenders are often looking for 30 or even 40% deposits on the mortgage deals they're looking for, so basically lower loan to values. So with that in mind, here's a little segment from our latest Money show on Switch Dunmo. We hope you find it useful. We're more than happy to do more of this sort of stuff, and remember, if you do like it, please subscribe on YouTube and like or follow Pension Man UK on Facebook, and stay safe and take care out there.
How about the more obvious but larger kind of investments, property?
Yes, property. We do get asked an awful lot of questions about property, and we will be doing a particular show on that, and we will be doing some of our investment dinners as well on that, because there's so much to unpack with property. The one thing I would say is that property prices will fall. There's no two ways about that. Income is down, and in the immediate aftermath of a crisis, nobody's going to be particularly brave. If you're committed to a purchase, you've exchanged contracts, well, okay, there's not a lot you can do about that. But if you haven't committed, I've already heard of several people coming back and renegotiating 10, 15, 20% lower. Sometimes the seller has balked at that and the transaction has fallen down. Otherwise, sometimes they've sort of met in the middle. But there's no two ways about it. Prices are going to fall. The one thing I would say, though, is what we mentioned before, was that interest rates have been cut. And it's a substantial cut in interest rates. From being 0.75% before the crisis, it's now just 0.1%. That's a massive saving. So the mortgage products will, when markets are unlocked, the mortgage products to reflect that will start to come out, and if you're on a variable rate mortgage, you will start to be seeing the benefits of that. And of course, if the cost of funding buying an asset, in this case property, goes down, it will act to support prices in the market. It might not happen immediately, and it certainly won't prevent house prices falling in the short term, but over the longer term it will make the numbers add up for more people than it perhaps was the case before the crisis. So in that case, should you be buying property? Well, financing is a major positive, because the cost of financing a mortgage has gone down very sharply, and it's not like it was very high to start off with. The two headwinds, though, are taxation and regulation, particularly from the perspective of an investment property. Taxation has gone up quite highly. Capital gains tax for a property gain is 10 percentage points higher than it is for a normal gain. And obviously regulations in the private rental sector have kept changing. You're less able to offset mortgage interest rate relief against your rental income, and various other squeezes have been there. So that's something to be aware of. The other is that if you think about the situation we find ourselves in, basically income is very hard to come by. We've spoken about that already, which means that it's going to be more difficult for the government to square its books with all the borrowing it's doing at the moment by raising income tax, because people's incomes have actually fallen of late. They were struggling even before the crisis, but they've definitely fallen a lot. So the potential for raising income tax is actually relatively low. There'd be less resistance to raising asset taxes, and both major parties have shown a propensity to sort of want to tax investment properties in particular, even though that might have negative impacts on, say, tenants down the line. That's not the major consideration. It's that it's easier to tax. And to be fair, properties have generally risen over time, but that's what capital gains tax is for. So be aware of that. So what I would say is, if you are considering property investment to capitalise on the cheaper prices, focus far more on income. Forget capital gain. If you get a capital gain, that's great, but what you are looking to do is lock in income. So do your research, look at potential rents, look at the valuations that you think you can buy at, be realistic about your costs, and if the income comfortably exceeds those costs, making an allowance for the fact that taxes can increase and rules can change, and we might even have rent controls of some way, shape or form. If you get the income part of the equation right, you give yourself far more resilience against future adverse developments. So that, you know, that's where perhaps a lot of people went wrong buying property in London a few years before the crisis. They were thinking, well, prices will always go up, so it doesn't really matter that the cost of my mortgage and the other expenses associated with owning a house, like service charges, it didn't really matter that they outstripped the mortgage or were roughly the same, because in the longer run the property would rise in value. What's actually happened is that property prices have gone down, the cost of ownership has gone up because there are fewer reliefs available, and sometimes you get people in a situation where they're losing £400 or £500 a month on a property even when it's tenanted, and as soon as they get a problem with a tenant, they're losing even more money. So the lesson for property investment is always to keep an eye on income and counter capital gain as a more speculative activity and a bonus if it happens.
So that's a lot to think about in terms of investments then, but everyone's got the time to think about it in lockdown.
Yeah. I mean, do a bit of property porn. Go through the websites, see what's available, see what rents are available in that sort of area, and that's the sort of homework you can do even in a lockdown.
Thank you.